Good afternoon, Srivastava. So, friends on the dais and friends in the audience, seniors. Uh, he has not given his biodata, so I have to only introduce Sir in the most crisp manner as I can. Sir has completed his IRS and he is in the income tax department since more than 2 decades now. And professionally, he has done his master's in economics and Sanskrit. So that means he has got an overall perspective of life, not necessarily only to do with Section 4 or Section 1 of the Income Tax Act. And I say Section 4 and Section 1 because they are also critical sections. So today, I believe it's like this, and I hope you all are enjoying the course that the chamber has structured for you all. You have learned a little and probably discussed with your friends more. And what you have seen is, up till now, the road that you have traveled is that you have tried to understand the law, you have tried to understand the setting of transfer pricing sections, that is 92 to 92F, within the Income Tax Act. And don't forget that transfer pricing legislation is part of the Income Tax Act. It is not some unearthly figure that has come down from heaven to tell us what is transfer pricing. It's part of the Income Tax Act. It is governed by the strictures of the Income Tax Act. Some people may agree, some people may not agree, but the critical part is that it is part of the Income Tax Act. And it's one thing to know the law, it's one thing to try and understand how it is supposed to be administered. So suppose you may have read the OECD guidelines, you may have read a couple of decisions, but that's not the law. The practice of law is when you go and appear before the transfer pricing officer, and you try and understand your case and you try and put up that case before the officer, and then you try and understand the perspective of the revenue authorities. I think if you don't understand the perspective of the revenue authorities, then your understanding is not holistic. So I won't waste time. Sir has got less time, so I would tell Rajesh to present the memento and Mr. Srivastava to educate us. Thanks a lot.
I had some 4-5 minutes to mail it to him. I chose not to. We are as good as what we do in the present. So when you go to the tax office, sometimes you are going to an officer and you have heard about him that he is very tough. And sometimes you hear that he is very mean. Sometimes you hear that he is very sweet. What comes out eventually, that is important.
Okay.
It's okay.
No, because they
Okay. So what comes out eventually is important, because we tend to form stereotypes, and for the young people especially, it is fair not to keep any stereotypes, any prior viewpoint. Then only you examine something in a neutral manner. Then only you ask questions. If this section says this, or my teachers have taught, or my seniors have taught me this, why it should be this only? Just because somebody has taught you. Where is your perspective on it? Because for years, rather for decades, there was a geocentric concept of the universe, that the sun and moon were revolving round the earth. So when Galileo said that no, it is just the reverse, there was a lot of disquiet. He was eventually put behind the bars. But then we know how science progresses. And even though I don't like to, but I'm pretty aware of the fact that some of my probably misdeeds have caught attention of the organizers and they want me to hear on those controversial topics. Anyway, see, the topic for today is something that I do not disagree with. What is the topic? Approach of the revenue and their expectations. So while I'll speak on both the parts, approach of the revenue and on the part expectations. Why I do not agree to this approach of the revenue. Okay. Now, when I joined the department after my training in '96 in Calcutta, my immediate superior, he taught me one thing. Listen, you have done the investigation in your case, you have formulated your order in your mind, your arguments. Now you are going to write the order, but before writing the operating para, please pause and just think that there is nothing called pro revenue and nothing called pro SSC. You are judge, and every judge has the powers of the divine. You have to give justice. Now this is the concept on which I was taught, or I was initiated into the department. So when we talk about two different approaches, approach of the revenue and approach of the SSC, we are looking at two adversaries. When there are adversaries, there will be game. There will be Tom and Jerry. So what will happen is anybody's guess. Now this why we may be approaching something from two different sides. Like this is the nameplate kept over here. It's pyramidal in shape. There is one incline from my side, there is one incline from this side. Supposing I am climbing this, I am climbing from this side, you are climbing from this side. Ultimately we reach here. We culminate here and then the order is passed. Now this is opaque at the moment. I take out this. This is no longer opaque. This is transparent. So you are climbing from that side, I am climbing from this side. We are approaching each other. We know where you are and why you are there. We know what is the gap between our approaches, and eventually we bridge the gap in lesser time and in a much more hospitable manner. Now this was taught to me by some CAs in Calcutta. What happens when somebody comes to us, I have read the file, or somebody has told me something about the file, I am having some preconceived notions. Okay, ये तो बहुत चोर है, इसको देख लेना है. Now there may not be something, but I am having my prejudice. So my mind is closed. The closed mind creates opacity. So this is opacity from my side. Now supposing you have come and somebody has taught you or told you, see, this officer is very, very mean. Give very little information, as little as possible. Now you are approaching with a closed mind. So if until the paper flaps from both the sides are taken out, we cannot understand each other. We need to be understanding. And this is one thing that I have found in all the successful CAs in my career, whether in Calcutta or in Bombay. Those big names that you hear about, they have this approach. This approach comes to them from their confidence. They have confidence in their skill. They have confidence in their relationship with the department. They have confidence in their SAC. These are the things on which they have confidence. This confidence makes you transparent. So they approach the officer in a very different manner. Sir, this is the case. In this situation, I will say, sir, these are the things. where we are taking this position. These are the things where we have not taken any position, and this is the place where we need your help. This is a discretionary item. This makes the things very easy. He gets this confidence. A junior level person may not have this confidence to start with, but this is something that you learn over the period. So this is what I was saying, that this approach, when we are talking about approach, we need to be aware that ultimately what is the approach of the revenue. See, we have started with two different, there was gap in our perceptions. After a process of say 6 weeks or 4 weeks, we have reached a culmination point. Now ultimately, what is the goal of the revenue? That has to be understood. And what is the role of the chartered accountants? Now another thing that was taught to me, both by the department and by the CS, was that all the chartered accountants and the practitioners coming to you are your invisible staff. They are like your inspectors. They are like your officers who are working for you. So you have to utilize this energy for your advantage. Now if I say that there is nothing called pro revenue and nothing called pro SSE, then both of us, you as well as I, are in a process of discovery of truth. We have to discover the truth. I may be having some gaps, some notions preconceived, and you may be having something that you want to protect, or your client has told you have professional compulsions, and then you say, sir, this is it, and you please take a view, but we want to protect this on these counts, we have these judgments, these authorities, etc. Now in the beginning of the civilization, when there was forget about nations, there was not even family, how taxation was done and what was the rate of taxation. Okay. Now imagine a caveman, because initially we were hunters and gatherers. So there will be tribe, there will be hundreds of people, male, female, old, infirm, kids, infants. In the morning they will go all out to the forest for hunting. In the evening they will come with that day's booty. Then in the evening there will be a fire, they will sit around, they will eat together, and then they will have some fun, go to bed. So what is the taxation here? Whatever income you had, 100% of the income was taxed. Now why? Okay, before I answer why, I'll give you another example. I see that many of you are young people, yet to married. You get a job, you earn something, say your first salary 15,000 rupees, you go home very happy, give it to your mother or father, and then mother gives you 2,000 rupees as, or 5,000 rupees as your pocket money. Again, whatever you have earned, you have given 100%. So why in both these situations 100% is given? Because you believe that the person who has taken it from you will spend it for the overall welfare of you and the family. You have that trust. This trust comes from the fairness in the delivery system. And that is why even today in Scandinavian countries, the average tax rate is more than 50%. Still people are very, very happy. They are considered the happiest nations on the world. On Human Development Index, they are again one of the highest. And in all countries, where there is problem with the delivery system, including us, there is more tax evasion and there is more stringent law, draconian rules, search, survey, etc., etc. Because we do not trust. So there is a theory in public finance that tax compliance is directly proportional to people's perception of the honesty of the administration. So this is a very important thing. So as I was talking about these two things, how you earn your income and how you give it to the society or to the family, there are two things. One, you give it for your welfare and social welfare. So taxes are for social welfare, including individual welfare. But in a complicated society or a more complex society, complicated is not a good word, or say a joint family, 3 or 4 brothers, although it has become rare, but still we are fortunate enough to see some joint families in business community today in Bombay also. Now, so long the father is alive, it's working. So father has very judiciously set the targets that you will give this much, you will give this much, you will give this much. Now, whatever target is set, is it proportionate to the income? You will see that it is not. It is proportionate to their ability to contribute. One brother, even if he is younger and he is earning more, he is stronger, the father will give more responsibility to him. Father will give more responsibility to the younger son because he has more ability. The less worthy sons will be given lesser burden. But whatever it is, higher burden or lesser burden, so long the father is there, he has kept the things in a transparent manner and he has some idea of justice about it. So when the contribution to the family is being made, this is like taxes being given to the family, the share or the giving of taxes is being governed by the sense of justice of father. So what is the logic for us? The logic is that although the taxes are for individual and social welfare, tax collection has to be essentially governed by judicious mind, by justice. If there is no justice, then it is a bad tax administration. And what is the oath which we officers take at Masuri Academy? That we shall deliver justice without fear, greed or malice. So if we are going by this, then there is only one approach, and that approach is of giving justice. There can be practical problems why we are not able to do the justice, but the approach has to be justice oriented only. There can be no other approach. If there is a tax administration whose substratum is not justice, then that system will not last long, and it is also not worth to obey such a tax system. There is something wrong. So this sense of justice. Now I came to Bombay in 1999. We are taught on these things. Now I am talking to you about some practical problems. I have not heard of, I have not read about it, nobody has ever told me, but I found those days there was some investigation charges, there were some survey cases, and I have to complete the assessment. And I will read, and I find that in the statement it is written that this disclosure is given in order to buy peace. I couldn't understand it. I went to my boss, what is this? What does this mean? And where are the supporting documents? 35 lakh is being offered and there is no supporting document. This was not the approach in Calcutta in 96 to 99. But this happens. And I am here since 99. I have not been able to change the system. I am not larger or bigger than the system. And so many of you will find that the system is so big. And the reality is that we are not Gandhi, we are not Arvind Kejriwal, we cannot change the system. So what can we do? Now this lays down between the high ideals of tax and justice and the ground reality. And that is why this kind of lecture sessions get constituted, that okay, let's get somebody from the tax and discuss their perspective. It's a sad state that we have this kind of situation. But then we have this situation, we cannot change it, neither I nor can you. So what is the way? The best way is to retain your sanity to the extent possible. It is said that Gandhi used to refuse briefs when he would found that they were based on untruth or fallacies. Now this is a very celebrated aspect of Gandhi's life. So many things have been written about it. But I know that there are many lawyers here who follow the same thing, although not much is talked or written about them. It is not only Gandhi's exclusive preserve that you will refuse something which is unethical. Many chartered accountants routinely advise their clients that boss इस पे टैक्स देना पड़ेगा, ये नहीं कर सकते. We have to say, या आपकी किस्मत बच गए तो बच गए. If officer asks, you are cornered. So you have to go with the approach. Ultimately, your approach should always be not to play with the officer. Neither let the officer play with his own agenda or the agenda thrust upon him by unscrupulous agents, but to discover the truth. To bring the thing to truth, you have to convince. So you have a double role. One, you are dealing with the client, you have to convince the client कि बॉस ये नहीं चलेगा, आपको इस पे टैक्स देना ही पड़ेगा. And then you have to convince the officer. We again have dual role, that we have to discover the truth and then we have to explain and convince our bosses, because there will be gaps in understanding. Bosses will think what is happening, if they are conniving or something. So long you are sticking to the truth, you are helping in the discovery of the truth, you will be happy. You will go home happier without any tension. You have done your job to the best abilities and the limits in which we are placed. We have existential limitations. Within our limitations, we have done our job. Maybe one or two of you sitting here may tomorrow become somebody who will break this mold. That will be a very happy situation for all of us. But within the constraints, we can still always help discover the truth. 99, I was posted to Tribunal Calcutta as junior authorized representative. So again, the first thing that was taught to me by another legendary officer of the department was that you don't have to necessarily argue and defend each and every case of the department. No. There are many cases which are not justified. Don't waste your energy and time on that. You can rely, let the judges defend. You conserve your energy for cases where there is chance, but you feel that there is heavy odds, there you have to prove your mettle. So, why he says so? If you go into the rules of the tribunal or the court, or if you go into the principles of jurisprudence, advocates on both the sides are not adversaries. They are officers of the court. They are there to help the court understand the facts and law and help the judges arrive at a judgment. So, if you ask me, what do I expect from a person who is coming to me with a case, whether for income tax scrutiny or TP scrutiny, my lookout and the lookout of all the officers in different degrees is always that you will help us understand the case. Wherever there is an attempt to disguise the facts, an attempt to be smart, we don't like it. Wherever there is an upfront approach, sir, this is this, this is this, this is this, we always appreciate. And you also earn brownie points, that if it is possible on certain issue to use the discretion in your favor, this behavior always pleases us to use the discretion in your favor. Now, when we use the discretion in your favor, again there is, frankly speaking, no favor. Supreme Court of India and other Supreme Courts in different parts of the world have consistently held that whenever there is a dispute between the state and the citizen, benefit of doubt is to be given to the citizen. So, we use this and give it to you. So, it is for this reason that we always appreciate such persons who help us. Now, there is a jargon in transfer pricing. People will come, they will say, sir, don't worry, we will give you comfort. Now, what is the meaning of comfort? I will tell you what is the meaning of comfort to a TPO. There are 110 transactions, it's a complicated case, and 22 box files. How do you expect the officer to go through them? And as it is in India, everything will get sorted in last 3 months only. So, in last 3 months, he may be having 100 cases, you may get 3 to 4 hearings, not more than that. Okay. So, all these things are there. Okay. Now, I am changing the scene. Seniors who are sitting here, they go to the tribunal. Again, the same issues are there. They have done the briefing to the lawyer. The judges have come, they have already read the file. Now, that entire case, sometimes you get in the tribunal just 7 to 8 minutes. Within that 7 to 8 minutes, everything is discussed. How it happens? Because entire document has been paginated 1, 2, 3, 4, 5 to 1348. Every relevant thing has been flagged. Sir, paper book number 1102, please read. Now, the AO or the TPO who does the basic work, he never gets this kind of comfort from the other side. And the people who are coming, on most occasions, and especially the young people, they are not prepared. If you ask some probing questions, they fumble. For an officer who is under so much of stress for lack of time, this is the most irritating aspect. is asking something you don't know, you have started looking for it. You want to say that, sir, in this particular case, you cannot use this comparable because there is a related party transaction exceeding 25%, but where is the calculation? Or even if you have kept the calculation on a plain piece of paper, the officer would like to have his comfort by going to the annual report of that comparable company. So in the annual report of that comparable company, if you have kept it flagged, you can immediately show it to him. Sir, this is the calculation that I have made. Kindly refer to page 73 of this comparable company's annual report. This is the list of transactions. It is like this. Comparable number 19. There are 20 comparables. Comparable number 19, you say that this should be included. TPO says that it should not be included because functionally they are different. No, sir, this is functionally similar. We have gone through it. Please see. And then what is offered is some pages, some extracts from annual report, some extracts from the website, which is highlighted with the highlighter pen. But these are not the details for which the TPO is looking for. Now there is something called Companies Act, and there is something called Indian Accounting Standards, where a statutory disclosure is to be made about the functionality of a company. This company is doing this, and that is a statutory declaration. The company cannot go back and say that, no, we have done something else. In the annual report, company will say so many things, and also there is no prioritization. But here, whether in this or whether in the generic product disclosure, there is prioritization. The important thing has been declared. Website is a dynamic thing. It keeps on changing. So we are always looking for something which has got some legal base, and then it will act as a perfect alibi. You are relying upon it. Now alibi has to be valid. Now this is the type of work that we do not get. Now these are the two samples only. There can be so many examples which I don't want to get into those things. The idea is that you try to step into the shoes of the other person, and that can happen only when this is transparent. You have trust. There is trust, mutual trust. He has to look into everything, and actually there is no benefit in getting an order done by hoodwinking the officer. In the short run, you may gain something, but most of the successful professionals in this field today, some may be very honest, some may not, but when they were struggling, when they were young, two things were always there with them: hard work and integrity. They approach this profession with two things. Most of the successful people may not be the topper of their batches, but if you earn over the years the confidence and trust of the officer, when the officer knows and the word goes from one person to another person that yes, Mr. So and so or Miss so and so who is coming, whatever is there, she will tell the truth. You don't have to be a topper of the class, but the most difficult thing that you have to believe in honesty, in truthfulness. And you may not be successful initially. You will not get shortcut to success, but in 20 years time you will earn a reputation for yourself. In this profession we make our career this way, slow way. This is not 2020, this is a test match. So as I was dealing with the approach and expectations, I have dealt certain subjects, certain theoretical basis, and although it is not explicitly asked, but I'll discuss it because I know people are curious about what is the approach of the department, especially transfer pricing department, on adjustments related with share prices. It's a very simple case for us. We look at it very differently. What we do, as I told you, the founding principle of income tax is not income but ability to pay. Similarly, the founding principle of transfer pricing is not income. It is the arm's length principle, that every transaction has to be compulsorily done at arm's length. And this has been discussed in detail in OECD guideline, in British commentaries, in US commentaries, that it is the arm's length principle which is paramount here in this chapter. Once we accept that in chapter 10, arm's length principle is paramount, then how do we tackle any variation from arm's length? Now, first thing will be computing the variation from arm's length. Once we have computed, different nations have taken different approaches to deal with the variance. In some countries of the world, they ask the taxpayer to bring the money of variance within a stipulated time and pay interest, and after a certain time they take a strong action even to the extent of prosecution. This is different from Indian approach. Now, approaches are not material. You may have different approaches. What is material is whether there is any variation from the arm's length principle or not. Since you people have some background on TP, you would have gone through OECD guidelines also. In the initial chapters itself, it is discussed that transfer pricing variation can take place for non-tax reasons. So, if it is taking place for non-tax reason, will we take action or not? That is a question. Now, it is also further said that no matter, in all such situations, the arm's length price is to be exacted, that is to be approximated. So, the revenue believes that whenever there is a share transaction and there is difference between the arm's length price of the share and the reported price or the transacted price of the share, we will make transfer pricing adjustment. This is the view of the department. This view has been taken. Now there are situations where there is litigation which we are fighting in various forums, from DRP, ITAT, CIT appeal, High Court also. What will eventually come out, I do not know. That's a separate thing. Important was to understand our perspective. This perspective is based on such a simple thing. If you closely examine heads of income, now we have 4 or 5. Now there is no point to discuss income from house property and other sources, because other sources there is an exhaustive list. So capital gain and business from profession and something. To microscopically examine the wordings over there. The variance from arm's length price to transfer price does not get captured under these two heads. But for last 10 years, since 2002, we have been making transfer pricing adjustments without having an explicit head of income or charging section. So what does this mean? This simply means that chapter 10 in itself is a complete code with charging powers, and this is our defense. There is an interesting, because I believe this has become very serious. Just interesting judgment which happened last year from the Supreme Court, which said that even if you are living with a girl in a live-in relationship and there is a child, then the child will have all the rights in your property as if it were a legitimate child. So now, for errant boys or girls, it is no longer, this freedom is no longer available that you are there and then you move on. You create something, now that something will come after you. So if you are undertaking a transaction knowingly at a price which is not arm's length, the child or the variance will always come after you. Any more questions? Because I would like to hear from you.
Throughout this 5 days of elaborate discussion, we have been told that this chapter 10 is a machinery policy. It is for the first time that we have come across a state that this is a complete code with specific powers to tax or charge. Something more on this, please.
Yeah, this is a good question, and good that you asked me. In the writ petition of Vodafone and Shell, drafted by two different people but vetted by Harish Shalve, and he is a big expert, it is an admitted position that chapter 10 is a separate code and it has charging powers. They are disputing certain other thing. They are saying that no income comes out of share premium, but they have not disputed the implicit charging powers. That is one thing. Second thing, as I told you, when you go back, please read carefully, slowly, breaking it in word by word, the charging section and the heads of income, and then tell me whether variance in arm's length price and transfer price get captured under the existing heads. We found that it does not get. Therefore, it has to be the charging machinery also. Yes.
How does it matter and what value do you expect?
Good, good. How old is your son?
One is 8, one is 15.
Okay, 15. So in 3 years' time he will be adult. Good. Now supposing there is a property distribution, redistribution in the family. So whether you are governed by Dayabhag or Mitakshara, will you give your child who has become adult and is asking for his share anything which is less than his due? Or any child, some of you are adult, if the parents are giving, and it's a question of principle. On the question of principle, whether you will accept anything less. A child is a part of you, part of both the parents. You have spent money on him. You have spent your days on him. You have spent your nights on him. And then he is there at 18. But by the conventional law, traditional law, as well as the written law of this land, he has equal share. Therefore, 100% subsidiary, which is nothing but the flesh and blood of the holding company, when it comes of age and there is a transaction which is based on certain principles, then the principle of arm's length has to be followed. Second part of this. In one case where we have dealt with this issue, the SSE company before TPO was 100% subsidiary and the holding company was in Mauritius. When the shares were issued by the subsidiary company to the holding company, the shares were issued not at par, but they were issued 800 times above par. 800 into 10, 8,000 something. So why this son or 100% subsidiary thinks it appropriate that I will charge my father or the holding company at a rate which I believe is market rate, when you have been formed with that capital and initially the professionals have also come to do it for you. Now today you have become strong, still you do not have any other shares, and still the transaction you yourself are doing at 8,000 plus. Simple reason is that any share transaction, forget about the transfer pricing. The Companies Act is there, the FEMA is there, the RBI is there, and forget about all these also. Normally, if due diligence is taken, then it will happen only at arm's length. And that is why the company at its own level did the valuation at 8,000. We did it at something like 50 or 60,000. Dispute is between whether 8,000 was correct or 60,000 was correct. The dispute is not that it is immaterial whether the transaction between holding company and subsidiary company needs to be at par. No, that's not the issue.
The issue is that the subsidiary say needs 1,000 crores. Now whether I issue 1,000 shares of 1 crore each.
I got it. I'll come. Now, that's a good question. That's a very good question. Now, what happens is, and this is the question which you people have to ask the CFOs or the CEOs. That brother, if you are going to do a transaction, now the times have changed. You do an act, आप मर्डर करके आ जाते हो, उसके बाद कहते हो कि मुझे बचा लो. No. We have to move to a situation wherein in certain class of transactions, you have to take the prior approval of your in-house CA or outside experts. That my intention is to infuse 7,000 crore. Okay, what is the arm's length price? Arm's length price is 2,500 rupees per share. Accordingly, I will take lesser number of shares and avoid this kind of situation in the hands of tax administrator. You people have to drive it and aggressively drive it to the CFOs and CEOs that you cannot take taxation for granted. You cannot take us for granted. You cannot take the administration for granted. Otherwise, they will come back. And when they will come back, they will come back harshly. Supposing there is a genuine transaction where the intention indeed was to bring 800 crores only, and the SSE should have settled with lesser number of shares. The AE should have settled with lesser number of shares. but the TPO is making a statistical adjustment of 8,000 crore. It's going to be very heavy. So it's going to be heavy because certain things were not taken in or understood in right spirit. Yes, it makes the difference. When yes, I'll tell you what is the difference. The difference is when the company gets dissolved, you are bound to return the money to the shareholders. So if more shares are issued, you have to attempt to return to all the shareholders, to all. But if there is lesser number of shares and more money in share premium, then you do not have that situation where you have to return the entire thing. The company has done good business or company may not have done good business, it may be into bad situation. There will be liability to return only the share capital, not the share premium. And here there is a design sometimes. What is the design sometimes? That I am putting this much money into India. It may work, it may not work. In case it is not working and the company is dissolved and there may be liabilities, okay, the reserves will be used to pay the liability. So that is the last. Yes. This is the difference that is coming. See, this share premium which is there. Now share premium we put, where do we put? We put it on the liability side. But also correspondingly, there is entry on the asset side. For the share premium, we don't have to return it necessarily. But share capital, if one person stands up, he says, we will have to think, इसको देना है कि नहीं देना है. लेकिन उसका 10 रुपया मैं दे रहा हूँ और 150 रुपया शेयर प्रीमियम है, मैं मना कर सकता हूँ कि मैं भाई 150 रुपया नहीं दूंगा, तुमको 10 ही रुपया दूंगा. नहीं, ये तो डिपेंड करता है ना कंपनी का क्या सिचुएशन आउटकम है. हाँ हाँ, that is the question. भाई when the company is being dissolved, at that time you are doing the valuation. क्या आ रहा है पर शेयर, क्या हो सकता है? There can be a situation that per share there is only 2 rupees coming. Every shareholder is getting. उसको ही जाएगा ना. नहीं, फर्क पड़ेगा. फर्क ये पड़ेगा कि भाई आपका जो शेयर प्रीमियम आया है, that share premium could have been utilized. Now there can be couple of situations, multiple situations. There can be a situation of profit. You are, instead of 10 rupees that you originally invested, you may be getting 50 rupees. And there can be a situation that instead of 10 rupees that you are getting at the time of dissolution only 2 rupees. But before dissolution, certain stages will come. Now certain stages, if supposing there are various kinds of assets which are created, there are various kinds of liabilities which are to be paid. Now these things, when you have the reserve, you are utilizing the reserve for certain purposes. The shareholder can ask money on two situations, one at the end, one a particular shareholder can ask in between also. This is again a situation. In between also some shareholder is asking, and the board may not always say that we will not give you the money. So these complicated situations are there in which certain situations arise. That is one thing. This is from the perspective of the promoter. Now, from the perspective of an outsider, and partly from the perspective of the promoter, the difference that it creates is, if 3000 crore rupees are coming by way of share premium and 1000 rupees is coming by way of share capital, this 3000 crore rupees, whatever it has come, if the transaction were not at arm's length, still the 4000 rupees would have come, but it would have been in form of share capital. What we look at is that whatever is quasi liability is also quasi asset. This is what we people look at, because if a person is half a girl, he is also half a boy. Therefore, what is your argument that, sir, this is on the liability side? Why you are taxing me on this? I say that this is, if this is on the liability side, it is also sitting on the asset side, and by sitting on the asset side, what it is doing is that it is either getting employed in the business. If it is getting employed in the business, even if the business is into losses, it is generating indirect taxes, it is generating employment, salary, and it is having a multiplier effect in the economy. If the entire thing is not put into business for say 2 years, then for 2 years that entire money will not be kept in a steel cupboard. It will be kept in some bank where you will earn interest. The company earns interest, bank gets this at lesser rates, bank advances it at higher rates, so bank earns money, Indian banks earn money, advance it to people who are wanting some more funds, and then the economy has a certain effect. It is because of this that in the transfer pricing, prior to amendment itself, we have the word impact or effect upon income, profit, loss, asset. Now, present income as well as future income, both are adversely impacted if a nation is deprived of the share premium. And that is why we try to check this kind of transactions which are not happening at share premium.
Sir, also in case of transaction of various purchases,
Mm-hmm.
you're doing from an AE outside India, what has been really been the process is that you try to compare this with another set of suppliers, and wherever there is a difference which is adverse, you just try to add it to the income. But there are so many situations where the price is in favor of the AE. There nothing is done. They just try to do one-on-one analysis.
Yes.
जहाँ पे favorable नहीं है, उसको छोड़ दिया।
That's a very simple thing. How regulators look at it. You start from Borivali to come to Churchgate. On the way, you have got 50 traffic signals. You obey 48. You disobey 2. Now, will the person who will give you ticket give you adjustment for 48 that you have obeyed?
नहीं होता है। Practically for the SEC, it is so difficult कि हर दिन का price कैसे decide करेगा? When the price is decided sometimes for a period, because the fluctuation in prices, एक ही दिन का gold का price भी 10 different prices आता है।
Yes.
So at no point of time the SEC is looking for a tax advantage.
No, see that point is different. This point that you are now saying is different. In a day, there can be so many prices. Supposing you are examining cup, gold price is given. Intraday variations are many. On most occasions, the intraday variations are not so huge that you will not get the benefit of plus minus 5%.
पता नहीं चलता
Ye-
the problem is like this: when a person is doing his business, at that point of time he is into 500 different commodities. इसमें there is always a possibility कि आज मैं यही के पास से एक प्राइस में सप्लाई ले रहा हूँ,
I'll answer.
मेरे पास कुछ शॉर्टफॉल है तो मैंने किसी और सप्लायर से भी माल लिया. There is always a possibility. So there are 95% cases where the price is in the favor. One should really either look at an average so that the SSC at least gets some breather.
No, see, this.
Just don't take it as revenue also only. Look at the SSC as well. Where you said in the beginning that you are a judges.
No, I'm trying to understand his perspective. See, how the law has tried to tackle this situation. That is one thing that we have to see. The law has tried to tackle this situation by giving a plus minus 5% band. That is one thing. Now it has become 3%. Now the work of the consultant comes here. On many occasions, I see consultants who dig into data and they give you data. Sir, on this day, the SSC has done the transaction at this price, but there are so many other prices also. If you take average of these prices, one day price, then the price that is coming is this. We accept it. Sometimes the consultants are so hardworking that they try to even give you weighted average of that day. And they say, sir, please don't take the day high or day low and compare my prices with the day high and make adjustments. We find these arguments very logical and valid. 1. 2. Supposing the TPO does not give you benefit, please ensure that your arguments have come in your submission. Even if the TPO is not willing or he doesn't have time to record your arguments in the order when he is making adjustment, you have given your submission, it is part of your submission. So when you go to CIT appeal or DRP, you can always say that, sir, we have taken this ground before the TPO. This is there. So this happens, especially in some bank transactions, because the transactions are numerous. There comes a situation where one price, which is the day high price, is beyond the 5% limit. But we do give average, we try to take average and give that benefit. But even if not giving, you take that chance. Now problem that comes, this because intraday variation is not a problem. The problem is coming in annual variations. I'll give you an example which is more apt to the situation that you are trying to portray. There is an export and the receivables have been received late. So I calculate for each and every invoice the delay. You say that, sir, out of the 365 days and 180 invoices, you have calculated delay on 64. But on 116 invoices where I have received before time, you are not giving me any credit. This, I believe, is a more now this again, I always advise the consultants appearing before me that you please place the Excel sheet where this is also shown. I have limited discretion. I have constraints. I may not be able to agree, even though I may agree with you, may not be able to agree on paper, but let it be there. Maybe DRP, if not DRP, maybe ITAT will judge the issue. Now coming back to the original thing, that a tax administration has to be necessarily governed by justice. It is for this reason that the tax department has internal appellate system. If you look at data, majority of the orders passed by the AOs or TPOs let us keep TP for outside, by the AOs are not confirmed by CIT appeals. And again, majority of the orders passed confirmed by CIT appeals are not confirmed by the tribunals. Your tribunal is again external body. It does not mean that tribunal is corrupt and they have taken money to give justice to the taxpayer. I have worked in the tribunal for 3 years, and I would say that by and large, tribunal gives fair deal. It gives fair deal. Therefore, it is important at your level, at the beginning, junior level, that your arguments are placed. What will happen if your arguments are not there in the submission? वो set aside कर देगा. फिर वो पूरा painful process आपको. You again have to appear before the AO and all these things. There can be gaps between understanding. You and I may not agree on so many things. Please ensure it is there in your submission. You have taken a ground on that. Officer बोलता है नहीं लिखेंगे, ठीक है चलेगा. Somewhere you will get the justice.
Sir, I have one small question.
Yes.
So you said chapter 10 is
Yes.
a charging or a machinery charging? What did you say?
It is charging as well as machinery.
Correct.
क्योंकि चार्जिंग दिया और मशीनरी नहीं दिया तो भी नहीं चलेगा. हाँ, it's a complete code.
So this is my, I just want you to think about it academically.
Yes.
So there are 2-3 perspectives. I'll just try and give it to you. One is that if there is a transaction, and I'm considering the word transaction extremely wide, not reflective of income or expenditure, any transaction, and if that transaction is not at arm's length. So when you say a transaction is not at arm's length, so for example, let's say that an Indian parent purchases land from its subsidiary in the US at a not at arm's length transaction. Land is not depreciable under our Indian income tax. So when it purchases land, it has a permanent establishment outside India. Now this type of a transaction, how does it come within the precincts of the Income Tax Act? So suppose I purchase land for $100 where the fair valuation is $20. So it could be 20 million or 20 billion. It's a difference in unit. Does chapter 10 wordings allow you to see this transaction in the light of an adjustment to your total income?
You're asking me?
Yes.
It's a very good situation. And we deal with these kind of situations. We indeed have transactions which are similar to this. And it is in order to deal with such situations only that we have to understand and explain chapter 10 as a code to deal with variance in ALP. If there is an ALP and if there is a transfer price and if there is a difference, we have to deal with the difference. How do we deal with the difference? Different countries are dealing with them differently. What happens here in this case? This is a case of land. There can be a case of machinery. There can be a case of shares. That accumulated profits fly from India at the click of a mouse. It is so simple these days. So balance sheet transactions are very dangerous. Now you will ask me how under the existing act I will do it. I will ask you what under the existing act and chapter 10 stops me from doing this. People say that section 92(1), it says that any income arising out of international transaction, blah blah blah. Now I say, okay, read it. Where does this debar? It says that if there is an income arising from an international transaction, that income has to be computed with respect to arm's length principles, etc. I am not going into that. I am saying the transaction should have been done at $20, it has been done at $100. This is the variation. And I am levying, in India we have a system where we are levying tax on variation. And we are giving you also, again as part of tradition, that we are giving you the benefit of clubbing this variation with existing income. Again, there is no section in the act that whatever variation you have computed, you club it with the existing income. ये होता आया है, हम लोग देखते आए, वैसा करते आए, कभी किसी ने पूछा नहीं. अभी जब बड़ा एडजस्टमेंट हो गया तो पीपल हैव स्टार्टेड क्वेश्चनिंग. कई छोटे लोग हैं जिनका एडजस्टमेंट हुआ है. यस, fine. But income of which person? That is why I said initially, when you are into chapter 10, forget about income. Even in Income Tax Act, forget about income. Remember ability to pay, because some people, even though they have income, we do not tax them. Some people we tax at lesser rates. Some people we tax at higher rates. Now in this situation, who is gaining? The A is gaining. And who is losing? The Indian company is losing. How the Indian company is losing? Indian company is not having, true, Indian company is not making any income. There is no question that you make income and then I will levy tax. That is income tax. Here, the accumulated profits of this company, which it has done over the years doing business in India, that is being transferred. That is why I said it, one click of the mouse, so much money has gone. There is a bucket and there is a tap in my bathroom. So from the tap there is water coming. This is something like income coming every day. I have accumulated over 4 hours 3 buckets of water. Maybe not in this year, in earlier assessment years. All that 3 or 4 bucket of water has gone in this transaction. Yes. Then what is happening? Good question. It is tax paid. No, I'll come. That is a separate thing. Whether it amounts to giving loan or not. That is the machinery part. What is happening? There is a tax base erosion. This money, supposing this difference between $100 and $20 was $3 billion. If this $3 billion has remained in this country, this would have been a different scenario. See, this money which has remained in this country is after dividend repatriation. Whatever was the rightful due that A has already taken, in spite of that there is $3 billion. So you find a way you send it. Otherwise, it would have remained here. Now, tax base erosion is a very strong concept in transfer pricing. Now, recently there is a paper also on base erosion and profit shifting. Now, in every country of where transfer pricing is there, this base is a very, very important concept. We have to protect our tax base. If this transaction were not there, had this company been in a position to send this money out? Is it not ethical? So this situation has to be tackled, and transfer pricing allows you to tackle it. We all know. See, what happens is that we can look at it this way. Okay, एक ये रूल है, ये पैसा भेजना है, कोई एक नॉवेल आइडिया निकालो, उसको भेज दो, वो एक अलग तरीका है. But that is not the tarika that I am preaching here, and that is not the way by which most of the big consultants of every city has become big. They have always, I have seen that in the big people of every town, the element of honesty is also more than most of the people. If you find that this is unusual, then put it to the test of ethics. And then you look into your textbook, what can be done. So income, वो क्या होता है, income का concept, ये frame of reference का पूरा, it's entirely a game of frame of reference. When we are into income tax and we come to transfer price, we have a hangover of income. We examine transfer pricing chapter with the hangover of income. When we are in a train and the train is moving, then if you look outside, immediate things will be moving very fast. You feel as if you are static. And the things at distance, at infinity, they look static. These are different frame of references merging and causing illusion. We are trying to deal with chapter 10 with the illusion of income. Actually speaking, even in a classical transfer price or international transaction, there is no real income. Supposing there is a purchase transaction or sale transaction and actually some nuisance has taken place, some variance has been parked out. But then the Indian company has sent the benefit abroad. Indian company has not earned. Supposing we have purchased, the Indian company has purchased something from the Spanish AE and paid more than market price. Where is the income to the Indian company in this? On the contrary, Indian company stands to lose and the Spanish company stands to gain. Nonetheless, we say that this is the variance, and we are very liberal in the sense that we are allowing you that, okay, we will let you club this variance with your existing income, which may be losses also, and eventually you will not pay any tax. So we are saying that, see, we will not let you do this variance, and we say this is the adjustment. Now what is this? Is it a real income? It is a no, if at all we assume that this is income. First of all, we should not assume this as an income. We should straight away say that this is variance. This variance will be adjusted with the existing income and taxed. But assuming it is income, then this is a notional income. Another thing, everywhere in income tax, we try not to tax notional income. And we also try not to double tax you. But knowing fully well that this is, if at all it is an income, it is notional income. And this is leading to double taxation. Because although in the first place the Indian company suffers, it has suffered loss of income. We are treating it as income and we are taxing it. And there, so what is happening? Notional income plus double taxation. But why do we do it? Because we are dealing with a very, very different frame of reference. When we give wrong terminology, then there is bound to be import of the hangover of income. We should have called it variance, tax on variance. Income बता करके सब गड़बड़ कर दिया है. Okay, thank you very much. I have to rush somewhere. Otherwise, I would have loved to spend some more time with you. Maybe some other occasion.
Thank you, sir.
Well, friends, before coming to the pleasant task of vote of thanks announcement, tomorrow breakfast will be served at 9:30 and we'll start the session at 10 a.m. The topics to be covered are customs and tax conversions, transfer pricing 10A, 10B, then BEPS, GAR and TP, how do they work. And after lunch and after tea also there will be a panel discussion where the panelists are Mr. C.S. Gulati, CIT, and Mr. Rohan Fatarfekar. Moderator is Mr. Vispi Patel. Now coming to the pleasant task of formal vote of thanks, Vispi, President Yatin and friends. Frankly speaking, sir, first 40 to 45 minutes I was just mesmerized by your talk. Because you had taken the relation between the department and the profession at an entirely different level and given a new dimension by itself. And that speaks of how you attend your professional who approach you. Purpose of inviting from the department is to strengthen the relations between the department and the professionals. And if any shortcomings are there, that has to be bridged. Sir, we are thankful to you for sparing your valuable time and speaking frankly to the friends over here, and from Chamber's side of you and from all of us present here, present a very hearty vote of thanks to you and request all of you to carry a round of applause.
Thank you very much. It was a pleasure, and whenever you feel that there is something on which there is an existing view, I would request to pause and think whether that existing view has to be accepted or to be re-examined.